This is the best explanation I have heard for why your raises, if you work at a corporate job, are basically non existent to terrible. Hi, my name is Jeff Wright. I'm with Fish Creek Capital. In this video, I'm going to explain why your raises are so small and what you need to do about it. Okay, your raise, if you work in a corporate job, I worked in a corporate job for 18 years. I was at a regional bank, I was in IT, managed IT employees and IT applications for the bank, IT projects for the bank. And it was hard to get a raise. You could play the politics, you could get promoted, and you could get on these bonus plans or whatever. But the basic raise for most employees was often non existent to terrible, frankly. And I was watching a Real Vision video. They have great financial content. Go to realvision.com to check that out. Raoul Pal was talking about that if you're an employee, that your raise is going to, or your raise, your income is basically going to track to what the real GDP is. Real GDP measures economic expansion, excluding inflation effects. So the average GDP for the last really 5 years or so, and I'm doing this kind of live, so bear with me here, has really been 2 to 3% since 2022. So does that sound familiar? 2 to 3% for your raise? I bet it does. 2020 for 2025, we just had the third quarter GDP come out on December 23rd, and it was actually 4.3%. What beat that? That beat expectations. That came from just the growth was driven by consumer spending, exports, and government spending. Also, that was on the high end. That compared to a 3.8% growth in Q2 of 2025, which was really also on the higher end of that 2 to 3% range that we've averaged for the last several years, according to Grok. I'll say that. So does that not sound familiar? If you're an employee and you're in a corporate job, you're going to see that 2 to 3%. That's why you're getting that, is because as an employee, your income is basically going to track that real GDP. That's why you want to focus on building assets. That could be real estate, that could be through equities with dividend growing stocks. That's what we like focusing on here at Fish Creek Capital. It could also be through owning a business, but you've got to find a way to be able to beat that minimal raise that you're going to get as an employee. You'll just never really get ahead financially if you're depending upon that. You won't hardly even stay with inflation. So this is why, again, we love helping people here at Fish Creek Capital, focusing on building a plan that will help them grow their wealth through cash flowing assets. That could be real estate. We can advise you on that. We love focusing on dividend growing stocks from the stock market perspective, from an equity perspective. We're focusing on the cash flow that these businesses generate, especially cash flow that is growing over time. It's how you compound your income like tremendously. And if you can stick with the plan, we'll help you stick with that plan. By the time you get to retirement, you will have cash flow that you can use, and you won't have to even worry about hitting your principal in most cases. Please reach out. I can help you with that. But if you just stay, working for another company, there's nothing wrong with that. But make sure you have a plan, because those 2 to 3% raises, just remember, real GDP, 2 to 3%, that's what you're going to see. That's really probably what you can expect. And I want to help you get out of that rat race so you can get ahead, and you can retire comfortably. Please reach out, fishcreekcapital.com. Click on Learn More. That's a quick way to reach me. You can also please like and subscribe. Follow my YouTube channel, Fish Creek Capital, where you will hear more content like this.